Good day, viewers. My name is Ranga, and welcome to yet another episode of Analyst Insights, a show where we discuss anything business, finance, and investment. Today, once again, I'm joined by my colleague, Rufaro. Welcome to the show, Rufaro.
Thanks for having me, Ranga.
So there's a lot of things that we need to discuss today, things that are topical, things that are in the papers and happening in our markets. I guess the first one we can start off with is the issue of the power cuts. A statement from the Zimbabwe Electricity Supply Authority, ZESA, warning us that the next 2 weeks are going to be very dark. Now we just want to understand from you what it means in terms of you're a business manager yourself. When you see that kind of statement, what does it prepares you for?
So I think over the last 20 years, we have a long history of failure from the power utility. Power cuts are part of, day-to-day life in Zimbabwe. So I think effectively what it means for business is you have to rely on your plan B, which is either a generator, which is going to consume fuel, or your solar and batteries. And this tends to be more expensive than what the utility charges for electricity. So I think the business community needs to brace for higher costs in terms of running their businesses day to day and consuming electricity. And I think that I don't think we are going to see a permanent resolution of these utility challenges. I think that as far into the future as one can imagine, we're going to have these challenges. So I think really it's a cue for the business community to actually wrap their brains around this and make a plan to a business continuity plan that does not involve reliance on the utility. So they have to have a permanent solution for power that does not involve ZESA, and it must be part of their strategy, and it must be priced into the cost of doing business. That's our reality here.
Yeah, and it looks like that won't be the only cost that businesses have to deal with. Looks like there'll be a lot of demands from the labor side as well, as the cost of living continues to go up. Just this week, there were reports that the average total consumption poverty line, which measures the monthly expenditure needs, had actually gone up by some 6%. And also, we are in the first month of the year. There is obviously a spate of rent increases for most people. So that obviously is adding cost pressures on the average household. And if it's someone who is going to work, obviously they are looking up to their employer in terms of them being able to come to the party with an increment. And schools are about to open. Uniform prices were going up, and pretty much everything. Most schools have increased prices and school fees rather, and insisting on US dollar payments, especially for the private schools. What does that say? What does that say about the inflation outlook, but also the current outlook, given this push for schools to demand US dollars, and the fact that government itself is planning to pay its employees $75 US as COVID allowances? So what's the from where you're sitting, what's the inflation and US dollar outlook that you have for 2022?
So if we look at the trend with starting with the official ZIMSTATS inflation figures, if you look at the trend in the last quarter of last year, Q4, inflation was on the uptick. And at this number that you're speaking to in terms of the poverty datum line is up 6%. If you annualize that over a year, you're looking at inflation of more than 100%. So it looks like a return to hyperinflation. And it looks like the faith and confidence in the local currency is actually getting less and less over time. And it seems that ironically, at the forefront of actually underpinning confidence in the Zim dollar is the issue of the Zim dollar, which is the government. Because if you look at the decision to be paying civil servants US dollar allowances,
Yes.
it's basically acknowledging that the the Zim dollar is not a good store of value, and that one can't plan with the Zim dollar, and therefore the civil servants are better off with the hard currency receipt, even making $50 US available per week. It's basically, I think we are on a path to dollarizing the economy more and more, and it'll be interesting to see to what extent that there's a lot of Zim dollar denominated transactions by the time we get to the end of the year. But certainly the inflation outlook is negative, and I think that the portion of our economy which is going to be transacting only in US dollars is going to increase, not decrease.
Yeah, so talking about dollarizing the economy, it looks like the central bank is actually grappling with the current issue. So we have seen this week them announcing a further postponement of the reopening of the auction to the 18th of January. They've given a number of reasons there. And we discussed it last week, the fact that they'd actually given a break of about 3 weeks, which is now being extended to almost a month now. And yes, so when you look at the push from the economy for US dollar payments in one form or another, how do you see that panning out? Should we expect a formal announcement, or maybe are we likely to see a scenario where the market is going to totally reject the Zim dollar and go straight into the US dollar? And if that is the case, how sustainable is it? What kind of lessons did we learn from the dollarization period that we had 2009, 2013? What should the average household brace for, given this likelihood of dollarization taking place?
So I think the answer to your question really is a function of the policy action that we see taken by the government over the next 6 to 12 months. They are in a position where they can continue to take action that undermines confidence in the Zim dollar and then therefore speeds up the market's transition to just US dollars, or they can pivot and print less, become more conservative fiscally, live within their means, thereby endearing confidence in the Zim dollar.
Do you see that? Do you see that happening? Being more prudent, printing less, and
so I wouldn't want to completely rule out that possibility, because in the first half of last year they did display quite a lot of fiscal
that's very true. Discipline.
Mm-hmm. So they may pivot in that direction once again. It's unfortunately, when you analyze government policy action in our country, one can't make predictions with high conviction, because if you look at the history of policy action over the last 5-10 years, what's consistent is that it's been inconsistent. We have announcements and reversals, announcements and reversals, announcements and reversals. So we had fiscal discipline in the first half of last year, then we had loose fiscal policy in the second half. So it's unknown what's going to happen this year. But I think that so far it looks like we're going back into hyperinflation. We're going back into a market that prefers US dollars much more and trades more in US dollars. If there's evidence that trend is reversing, I think we'll speak to that in future episodes. But for now, I think the outlook is that we are on a path to dollarization.
Okay, so given that picture that you have painted of the macro economy, as capital market players, maybe the obvious question that comes is, so what should be the play in terms of asset allocation? Where should money go? Where is value? What should an investor do, given that the picture that you've just painted?
So the capital allocation game for especially for regulated institutions like pension funds and asset managers, what it is really, it's a game of what is my least bad option.
Okay.
Because if you're starting off with a bank balance with Zim dollars, that is by far your worst option, because you have month-on-month inflation of 6%. Last year, if you had just kept your money in the bank, you lost 60% of your value in real terms. And given the way we've started 2022, it looks like annual inflation will actually be worse than last year. So you'll lose even more value if you just sit on your bank balance. So by far your worst option as for anybody allocating capital is to sit on a Zim dollar bank balance. Okay. So your options within the legal space is listed equities, private equity, and property. And property transactions are harder to do because your ticket size, if you only have, for example, $1 million Zim dollars, there are no properties in the market for that value. Their property starts at a particular ticket size. And so if you're going to invest in that space, you invest multiples of that ticket size. So it's harder to invest in property. Private equity has the challenge of governance, finding businesses that you want to invest in at the right price. So by far the easiest option for capital, anybody trying to allocate capital, is the stock market, because you can buy $1 million Zim dollars worth of shares in one go, or you can buy $100 million worth and anything in between, and you've got various options. Are you going to make a real return? I suspect not, because the market coming into the year was overvalued. But you're going to do much better than somebody sitting on a bank balance. And that's really the moral of the story, that if you are in that space of allocating capital, you have bad options. And I think the ZESA will be the least bad option.
There you have it. So you are faced with a situation where you have to choose from the least bad option that you have. And what's coming clear from Rufaro here is the fact that you don't want to find yourself holding onto the Zim dollars in the bank accounts for the simple reasons that inflation is actually rising and is expected to rise. Already the macroeconomic indicators are pointing to a very difficult period ahead, and maybe one is asking themselves a question: so what am I going to do faced with this scenario? So it looks like the least bad option, according to Rufaro, is maybe investing in something like the capital markets. And he has alluded to the fact that the other asset classes, though available, they may have some challenges to do with the ticket sizes that you have to deal with. For example, properties, the ticket sizes are huge, and maybe trying to get into private equity investments, you are faced with a lot of risk that you may not be able to deal with, and also the level of expertise that is required is huge. So it leaves you with the stock market as probably the only option that you have for you to preserve value, so that if you don't want to find yourself losing a bigger part of your wealth by just holding on to the Zimbabwean dollar. I know it's a rather unpleasant kind of situation, but look, there are always opportunities on the market. Last year, more than 100% in US dollar terms, returns were actually earned on the Zimbabwe Stock Exchange. I don't think it's unlikely that maybe you could achieve those kind of rates, but I think the market will be a good place for you to go. So there you go. I hope you have a pleasant investing year in 2022. And let's meet again in the next episode of Analyst Insight. And thank you, Rufaro, for those interesting insights. Bye-bye for now.